What's up, everybody? Welcome to a weekly recap, but a weekly recap of long term, so higher time frame market direction. And this is going to be one of those market directions that I'm looking at the 3 month, the monthly time frame, and kind of painting a picture of what I expect price to do. There's going to be plenty of opportunities for you to catch trades inside of each day. That's what day trading is. But at the same time, real money and the best kind of money that you want to be making is the kind of money that prints overnight when you're sleeping. And in order to place those kind of positions, you can kind of predict where the market's going to go higher time frame. Now, there's always going to be the opportunity or the chance for the market to turn around on you. It's always going to be a possibility for it to come back down, and after weeks of holding, it all goes to zero. That's just part of the game, and you still have to take the risks, because it's when you take those risks, right now, it may seem like gold is overextended. It may seem like we're at all-time highs and we're going to reverse soon. But this could be the bottom of gold. In a year, it can be at 6,000. And then we would have been wishing that we took the trades now and placed them last year, So why would you stop, and why would you not give yourself the opportunity to do that? And that's where having a live account comes into play, because no prop firm, first of all, is going to ever let you do that. They're never going to let you hold a position. And if you are holding it, your daily drawdown is going to reset. One of the days it's going to come back and you're going to lose 5K. If you're trading on a Forex prop firm that actually lets you hold, then it's going to breach your account, So it's not even possible with prop firms. You can only do this with a live account. And what you can do on this live account, what I'm trying to show you guys what you can do, is you can place positions that you pretty much go break even on and hold for months. And that's very possible, especially with the kind of movement that we've been getting from gold, especially in the last year, 2 years. And similarly, on other pairs, even Euro USD has been absolutely expanding towards buy side. So just in the span of this year, you could have caught an absolutely amazing swing trade on Euro USD. So the objective is to analyze the market on a higher time frame. So let's start off with gold, higher time frame, see what we see on gold and what to expect. Now, the fact that we are at all-time highs kind of eliminates the opportunity for us to enter any good positions 3-month time frame, knowing, this is when we're going to have a good opportunity to enter. So you just keep scaling down until you see something relevant. One of the positions that I took recently, it's not recently, it was months ago, but it was from this immediate rebalance on the monthly time frame. We came down, I think it was actually this one. We came down and rebalanced the monthly previous month candle, created an immediate rebalance, and then started running up from that. So pretty much preventing a new gap from forming. And I caught this trade, and it was one of my biggest trades at the time, which was about $12,000. And to me, that was just absolutely, phenomenal. I flipped a very small account to $12,000, and I got that payout on a live account. But then there's the art of holding your trades, and you can hold it for much longer. Say you enter on a key level like this, and you end up holding it much further than that. And the only way you can really do that is if you open a separate live account only dedicated towards holding your positions, and you just enter based off of higher time frame direction. And I feel right now we have such a good indication of higher time frame direction on the dollar. I've been looking at this 3-month time frame gap for quite some time, and it was either this one up here or it was this one right here, and we pulled all the way back down into this one right here. So I'm expecting price obviously going to go down, especially starting in January. It's going to go down on the dollar. So this means that we still have so much more room for buy side on gold. So if the dollar continues to expand towards sell side, then gold is going to continue to fly. Euro USD is going to continue to fly. Every other USD pair is going to continue to fly up. Nasdaq should move kind of with the dollar, so I'm sure once it hits its target, it's going to start turning back around. But other than that, economically, the USA is very strong still, so Nasdaq can continue running. It's not just based purely off of the dollar. I feel gold is impacted more by what's happening on the dollar, and Euro USD is one-on-one impacted. So on the dollar, here's what I'm expecting 3-month time frame. When the new January 3-month candle opens, I'm expecting it to start running back down. Like it's going to continue running down. Next, if you scale down to the monthly, you'll realize that there's this monthly gap on the dollar. So when we open up that new candle, obviously the new 3-month candle is going to have, first of all, manipulation. So if it closes somewhere around the midpoint or even below the midpoint down here, we're going to have some sort of manipulation. And manipulation is going to go in the opposite direction. So what I think is going to happen is that once we open a new 3-month candle in January, we're going to pull back up into this monthly gap right here, hit that IFEG, because after this month closes, this is going to be a bearish IFEG. So then I think it's going to come back up into it, create a wick on the 3-month time frame, and then continue back lower through this 3-month gap. So that's what I'm looking for on the higher time frame. It's just an expectation, guys, and you're going to hear me say what I'm looking for now, and it's going to be different from what I'm looking for then. That's because there's always going to be changes to what's happening in the world, changes to what's happening in the USA. And this is DXY, obviously the dollar, as well as gold as well. There's going to be changes for that as well. There's going to be constantly shifts in what's happening economically, so you have to adapt. This is just what I'm anticipating. I'm giving myself a narrative, and when I see the market playing out according to this narrative, I then know what to expect and what to aim for. Like if I see, oh, DXY still has a big bullish target. If it's going to keep running up here, it gets like to this level right here, I'm still going to be selling gold. I'm going to be selling gold as the dollar keeps running up. Then once it hits this target, I know now, oh, it's likely going to turn back around. And now I can start buying gold again. And that's pretty much how I do it. So use these kind of higher time frame analysis. Don't exclude the 3-month time frame. Don't exclude the 6-month time frame. Monthly time frame, very important. And then for weekly, because obviously we're doing a higher time frame narrative, it's not going to be very significant. I don't think that the price action on the weekly time frame is good at all. There's nothing significant to look at here. We got a beautiful sell-off this week and back into this 3-month gap. So we're just going to see how that adapts to this gap, where we close, and what we can expect in January. Let's move on to gold now. Gold, 4494. I have a beautiful position open right now on my live account. It's floating around $8,000. One of my positions did get closed out, so I'm down on the day. But I'm expecting this position to play out pretty nicely as well. It's on gold. So I'm just looking for it to continue expanding back up into that 1-hour gap. I did say I was going to close half, but I didn't. And I hope that this greed doesn't get to me. But I'm looking for it to continue pushing up higher with how the dollar is moving. Okay, weekly time frame, because obviously we're scaling down. You want to keep your eyes out on these type of weekly confluences. Like we just had a week recently where we had 3 like pretty much bearish candles, even though this one printed very shallow bullish candle. We pretty much dug down into this weekly gap. We filled it up and then turned around, and from this area, which was pretty much 4,000, we ran up almost all the way up to 4,500. Like that's $500, guys. Put some leverage on the line with a weekly gap, and like you're making an insane amount of money. You're compounding it like tenfold. Like you drop 2 lots and it runs $500, you have $100,000 right there. So like that's what the power of swing trading is, and you wouldn't even have to worry about it. You pretty much just place your position, you have a decent stop loss, and you run it up, guys. And at first you're not going to be able to drop 2 lots. You're not going to have the capital for that. 0.25. 0.25 is still going to be an insane amount of money by the time it gets up like this. So you got to be ready for these kind of moments with a live account. And that's what I've been preparing myself to do, is like you pay attention to these higher time frame confluences, like the weekly gaps. You wait for it to come down into one of these gaps. You think about what's going on with the dollar. And if it aligns perfectly, like now I'm obviously not going to be looking for buy side when it gets to this gap, because I don't know where the dollar is going to be at when it gets to that gap. Right now the dollar is bearish, so I'm not going to be afraid to buy gold even where it's at right now, because I'm expecting it to continue ripping up higher. But yeah, it's very important that you keep an eye out on these weekly confluences. You wait for it to fill it, you wait for it to respect it, and you can catch a beautiful swing trade position. Now let's take a look at Euro USD, because it has a lot more price action to look at. one of the things that I was looking at was 3-month time frame, because obviously we're ending the year, so 3-month time frame is going to be very significant to us. Here you go. 3-month bullish fair value gap, right? So there's a bullish fair value gap on the 3-month time frame, and it's closing as a bullish candle. So from the next 3-month candle in January, I'm expecting it to run up higher. The next thing that we have pretty much in Euro USD is monthly time frame. We have a monthly gap right here. It hit it very shallow twice, and I think that that's the next target that it's running into before potentially reversing. But then after that, we just have a bunch of highs, and we have a lot of higher price that we can run to. So we have a lot of potential on Euro USD. I do think it's going to run if the dollar actually continues to melt. Now, it's not just based on the dollar, but it is pretty much 1 for 1. If the dollar is running down, Euro is running up. So it's going to move almost identically to how the dollar is moving. And if the dollar has that big bearish IFEG, this right here has a big bullish 3-month IFEG as well. So I'm expecting this to continue higher. Then you just scale down and you think about, okay, how can I execute on this? You can notice the previous week actually failed to tap into this weekly gap. So what you can do is you can wait when DXY starts running back up in January to hit that monthly IFEG that forms. This one, 1 month IFEG. Once it starts running back up, Euro is probably going to melt down. If you see that it hits into this weekly gap, which also is going to be tapping back into this 3-month gap, perfect. You have a beautiful swing opportunity right there. And what you can do is like, look, if you're day trading, if you have funded accounts, you day trade with the same direction. You're still using the same direction to take trades. You just have other accounts where you place positions that you forget about. You put money into an account and you place these kind of positions. Start small, guys. You don't need a gigantic account. You can place 0.01 positions. One time I forgot about this small account that I was flipping, and I had like a 0.01 because the account was almost breached, and I was just like, whatever, and I forgot about it. I turned off the account and I was like, whatever, like that sucks. Like I was trying to flip the account. I almost blew it because of the over leveraging, and I left like 0.01 positions. And I came back to those 0.01 positions. They were like at the bottom of gold right here. 0.01 positions, and it was like down here. And I came back to it like a month or two later, and it's like floating like $500 from a 0.01. You know what I mean? So you don't need a big account. You just have to place the positions and forget about them. That's the best thing that I could do or recommend for you guys. So that's all I wanted to say. It was a quick little analysis. I obviously don't trade all these other pairs. We can take a look at NAS 100. What I think is going to happen long term, we obviously, same thing right here, weekly time frame. We tapped into weekly bullish gap. Once over here, ripped up. Second time, ripped up. So pay attention to wherever we do have these weekly gaps. Like we obviously had this one right here. We tapped into it. We respected it at the midpoint. Now we're running higher from it again. So pay attention to these higher time frame gaps. We have a no wick up here. We have a no wick down here. So if we do start seeing sell side, I'm going to be targeting that right there. And then same with once it continues to run towards all-time highs, I'm going to be targeting that no wick right there. That's it for this call. Thank you guys for tuning in. If you guys have any questions, unmute yourself. Let me know what you guys are wondering.